Hello, Assalamu alaikum students. This is your teacher Azka, and I teach accounting and business to O and A level students. Okay, so today I'm going to solve O levels accounting paper 2, variant 2, and this is your latest paper, October November 2024, as you can see, and we have 1 hour 45 minutes to solve the whole paper. Okay, so first of all, we have the A requirement in the very first question. And in the A requirement, what we need to do, we need to prepare the Kalima's cash book on the page opposite for September 2024. So this is month end, and we need to prepare the cash book for the Kalima. Okay, so we know that in cash book we have two sides. So if there is a cash inflow, so you will record it on the debit side, and if there is an outflow, so you will record it on the credit side. So and now let's see that how many balances we have, and after that we will classify that whether we should enter those balances on the debit side or on the credit side. So date is 2024, September 1st. Let's see that do we have any balance in 1st September. Okay, so at the start of the September 2024, Kalima had a cash balance of $240, a bank balance of $890 credit, and a credit customer, Elizah, owed Kalima $520. Okay, so first of all, we have the debit balance in the cash column, which is $240. So let's record it first. This is our opening balance in the cash column. Okay. And we have the credit balance in the bank column, which is 890 credit, and that's why we will write it here. It means that this is the overdraft balance. Okay. And if you see that they basically given us one more information that Elizah is basically the customer of Kalima. She owed $520 to Kalima. So, but we don't need to record it in the cash book. We will record it into the Elizah. As you can see here, we need to prepare the account for Elizah. So that's why we will write it here. So I think we should write it here. So Kalima, Elizah is basically the customer of Kalima. Okay, and this is basically our sales ledger. Because for customers, we'll prepare sales ledger. Okay. So Elizah owed $520 to Kalima. So that's why this is the debit balance. And this is the balance for September 1st. That's why we'll record it here. Oh, okay, so what happened on September 2? So September 2, we paid stationery in cash $82. So we purchased the stationery for $82. So this is the outflow. And that's why we have to record it on the credit side. Stationery paid in cash. That's why we recorded in the cash column. Okay. And on 3rd September, we did cash sales, which is equal to $478. So this is the inflow. That's why we will record it on the debit side. And a check for $30 received at the end of the August from Badr, a current customer, was dishonored. Okay, so we received the check from the Badr, and it means that when we received the check, at the end of the August, so we made the debit entry for it. But now we came to know that this is dishonored. So it means that we have to make the credit entry because this check is dishonored. We haven't received any amount from the brother. Okay. Uh, on 5th September, we paid wages by credit transfer, 1390. So again, this is the outflow. That's why we will record it here. On 7th September, we bought goods from Gulnar on carrot, which is $200. So that is why we need to write it on the carrot side. Okay, so basically we bought goods from Gulnar on carrot, but we carrot entry, we don't need to record it into the cash book. We will record it in the purchase ledger. So that is why this is not the entry we were going to record in the cash book. And what happened on 10th September, Kalima withdrew $150 from the business bank account for personal use. Okay, so these are the drawings basically. And 14th September received a check from Elizah in full settlement of the amount owed less 2.5% cash discount. Okay, so basically Elizah owed us to $520 and we have given him her 2.5% discount. So if you just multiply 520 with the 2.5%, so you get to know that the discount rate is $13. So you need to write it here because we allow discount to Elise. That's why. It means that Elise paid us 507. If you just subtract 13 from the 520, so the 507 is the answer which you get from the Elise. On 16th September, paid $120 cash into the business bank account. Okay. So this is basically contra entry because we paid $120 cash into the business bank account. So our cash has decreased and our bank column has increased. Okay, on 21st, what happened? Paid Gulnar the full amount due by credit transfer less at cash discount of 2%. Okay, so basically we purchased goods from Gulnar, if you remember, on 7th September, and we need to pay $200 to Gulnar. But we didn't pay it on 7th September, but now we are going to pay, we paid it on 21st September. So that's why we need to deduct it. We need to record it on the credit side because this is the outflow of cash. And that's why. So on 21st, Gulnar. Okay. So the total amount was 200 and we received 2% cash discount. So if you just multiply 2% with the 200, so the discount is 4. So it means that 4 we receive the discount and 200 minus 4 is equal to 196. So we paid 196 to the Gulnar. Sold goods to Elizah on credit. Again, this is not related to cash book. We will record it on in the Elizah account in the sales ledger. Okay, so I think we should prepare the Elizah account with that. Mm. Okay, so we sold goods to Elizah on credit. So it means that Elizah has increased. That's why we will record it on the debit side. On 23rd September, we sell goods to Elizah on credit, and this is 1450. Okay, and also we receive the amount from Elizah. We receive the amount from Elizah. So where is the amount which we received from the Elizah? Yes, this is on 14th September. We received a check from Elise in full settlement of the amount owed less 2.5% cash discount. So she owed us 520. Okay. And we have received the amount from Elise. So it means that since she paid the amount, that's why the sales ledger will reduce. That's why we need to write it on the credit side. So she paid us 507. She needs to pay 520, but we allowed a discount to her. That's why we have to write discount allowed here. Alicia account credit, discount allowed debit. Okay, and also if you see that on 29th September, a credit note totaling 25 was issued to Alicia for goods return. It means that Alicia return goes to us, and Kalima given the credit note to Alicia. Credit note means that Kalima accepted the sales return. So it means that this is a sales return and we will not write it in the cash book. We will write it in the Alize account. So if the sales return, so sales return will be debit and Alize account will be credit. So now balance the cash book. Okay, so the credit side is basically, first of all, let's calculate the bank column. 890 plus 30 plus 1390 plus 150 plus 196. This is equal to 2565. Okay. And you need to write it here as well because here there's nothing in the bank account. This is the shorter side. The debit side is the shorter side for the bank column. Uh, okay. So basically I did one mistake here. This amount which we received, need to write it here. We received the check from the Alize in like of course we received the checks. That's why we have to write it on the bank column. Okay, so 507 and 120, just deduct the 507 and 120 from the 2565. 2565 minus 507 minus 120. This is 19. once again. 2565 minus 507 minus 120. Okay. This is 26. Okay, sorry. This is basically 2656. Two six five six minus 507 minus 120. Okay, so this is 2029. And this is our closing balance CD. Now let's see the cash column. Okay, so in cash column, I think we have the header side of debit side 240 plus 478. 240 plus 478. This is 718. Now deduct 120, 82 from the 718. 718 minus 82 minus 120. This is 516. So we will transfer 2029 here. And in the cash column, we will transfer 516 here. Okay, so this is it. We have completed our cash book. Now let's see the other questions. Okay. So what does the carrot balance in bank on 1st September 2024 represent? Okay, so if there is a carrot balance in the bank column, so it means that this is the bank overdraft. Okay. So now let's calculate the Elizah account. Okay, so it is clear that the debit side is a heavy side. Just add the 1450 with the 520. We are going to balance it. 520. So this is 1970. Now deduct the 507, 13, and 325 from the 1970. 1970 minus 507 minus 13 minus 325. This is 1125. Okay. Name the section heading in Charisma statement of financial position where a balance on Elizah account would appear. Okay, so Elizah has 1225. It means that still Elizah need to pay 11252 to Kalima. So this is basically trade receivables. Okay, and we know that trade receivable is a part of current assets in the statement of financial position. Now let's move forward to the second person. Ben runs a small business but does not maintain a full set of accounting records, and he has provided the following information. We have the information related to 31st March and 1st April. Okay, so this is the uh, opening year and this is the closing year. Okay, so we have the premises at cost, machinery at cost, depreciation on machinery, inventory. So this will be opening inventory, this will be closing inventory, trade receivables, trade payables, bank, other receivables. And now in the first part of this question, we need to find out the capital of in like for the opening year and for the closing year. Okay. So how we can find out the capital? So the formula is very easy. Capital is equal to assets minus liabilities. Okay. Now let's find out the capital for opening year. So for opening year, we have the assets, machinery, premises are cost, which is 140,000. 92,000 machinery at cost. And its depreciation, we need to deduct it so that we can get the net book value. Inventory is basically is equal to 24600. Trade receivable are 39,600. And trade payables are the current liability. So we need to deduct it. And the bank is credited, means that this is the overdraft. Other receivables will be the part of uh, current assets. So the answer is, so two, 5,900. This is the answer. Okay. Now let's find out the closing capital for the year end. So the entries are again very simple. Premises are got, which is 140,000 plus machinery plus other receivables minus accumulated depreciation plus inventory plus trade receivables minus trade payables plus bank, because this is a debit balance. It means that this is the part of current assets, not the current liabilities. Okay, and now The answer is 289,900. So this is the closing capital. Okay. During the year ended 31st March 2024, Ben withdrew goods for his own use, which is $620. These are the drawings. He also deposited an additional $10,000 cash into the business, and this is the capital. Into the business bank account for his personal funds, from his personal funds. Okay. Calculate the profit for the year using the table below. Include your opening and closing capital from question number 2, which we just calculated, and indicate whether the amounts of Ben's transaction should should be added or deducted from the opening capital. Okay. First of all, we have the capital at the 1st April, which was, I guess, 259,900. Okay. And he introduced the capital, and that's why we have to add it into the opening capital, because this is the capital which he introduced at the start of the year. So 10,000 we will add it in the opening capital, and opening capital is this. Okay, and okay, so we need to find out the profit. Okay, so we don't know the profit. Drawings are 620, and we need to deduct it from the opening capital. So that's why we will write it here. And now let's see. The capital, the closing capital was 289,900. Yes, we just calculated it. We need to find out the profit. So here we are using the formula. If you know that how we can find out the profit. Since this is the question from incomplete records, so you might be knowing about that how we can find out the profit by using the adjustments. So the formula is opening capital plus additional capital and minus drawings plus profit minus closing capital. So since we don't know that what is the profit, okay, this is X basically. So we have to do the reverse working. Previously, we were deducting the closing capital. Now we will add the closing capital with the profit, and profit is X. Previously, we were deducting the drawings, but now we are adding back. We are doing reverse working. Previously, we were deducting the, adding the additional capital, but now we will deduct it. And previously, we were adding the opening capital into the additional capital. Now we need to deduct the opening capital. So whatever the amount you will get, this is your profit amount. So if you just do the reverse working, okay. So if you do the reverse working, so you will get that the profit for the year is 20620. Okay, so if you didn't understand, so I'm going to tell you again. Okay, so what you need, how you can do the reverse working. First of all, previously we were adding the closing capital into the profit. Okay, but now we will subtracting the closing capital from the profit. So there is nothing here in the profit. So this is X. So closing capital minus X. Previously, we were subtracting the drawings, but now we will be adding back the drawing. So 289, this is a closing capital, add drawings into it. Drawings is 620. Previously, we were adding the additional capital. Now we will reducing the additional capital. So it means that you need to deduct the 10,000. Previously, we were adding the opening capital with the additional capital, but now we will deducting the opening capital, and opening capital is 259,900. So if you do this, so you'll get the answer for profit for the year, which is 20,620. Now, what is the total adjustment we do in the opening capital and deducting from capital, and what adjustments we did in the total? So 10,000 plus 20,620. So total adjustment we did it here is 30,620. This is 620. There is no adjustment. We just deducted from the opening capital, and if we just see that how much adjustment we did in the total. So total we did the adjustment to 59,900 to 89,900 minus is this is equal to 30,000. Okay. In addition, Ben was able to provide the details for transactions received and paid. Received from the carried customer is this, gas sales are these, payments to carried supplier are these. So we now calculate the Ben's carried purchase for the year ended 31st March 2024. Okay, so how we can do that? We can do this by two methods, but I think we should use the purchase ledger control account. Okay. Uh, okay, so here I have made the PLCA and SLCA. And what is the question now? Again, read that in addition, Ben, okay. In addition, Ben was able to provide the details of transaction received and paid. So we have this information received from carried customer and gas sales, payment to carried suppliers. And now we need to calculate the Ben's carried purchases for the year end 31st March 2024. So for this, if we want to find out the carried purchases for Ben, so we need to prepare the PLCA. So we know that the opening balance of the PLCA will come under the carried side. So where I get gotten the opening balance of the PLCA. So as you can see, here we have information of the trade payables. So this is the opening balance of trade payables, like the PLCA, and this is the closing balance. Okay. So that's why this is the opening balance and this is the closing balance. And we paid some amount to our credit suppliers, and which is 224,700. So PLCA will be debit and bank will be carried. And also one more thing, if you see here, that Ben withdrew goods for his own use, which is $620. So drawings will be debit and PLCA will be carried. So that's why we have to write it here, 620. So the heavy side is the debit side. So if you just calculate it here, so this is the answer. And if you just deduct the opening balance and the drawings from the total answer, you will get the difference. And the difference is this. And this is our purchase, because we know that purchases will come under the credit side. So we will make this X, and we will find out the difference. And the difference will be giving us the information and the answer for the purchases. And similar things we will do with the SLCA. So as you can see that now they are asking us to write to find out the total sales, not only the carried sales. So again, we have the opening balance and we have the closing balance here. The trade receivables. This is the closing balance. This is the opening balance. Okay. And we receive the amount from the customer here. received from the carrot customer, which is 50,000. So SLCA will be carrot and the bank will be debit. Okay. And since they are talking about a total sale, that's why we have to add the cash sales also here. So we don't know the sales, but we know that sales will come under the debit side. So if you just add these three and deduct the opening balance, so you will get the difference, and difference will be the sales. Okay. And the next question is that as his balance is growing, Ben is considering maintaining a full set of accounting records. To allow him to do this, he believes he would need to employ an experienced bookkeeper at a salary of 18,000. Advise Ben whether he should employ a bookkeeper. Justify your answer with two advantages and two disadvantages of employing a bookkeeper. Okay. So let's talk about the advantages first. So if he will hire the bookkeeper, so the first positive point will be that it will allow the Ben to focus on the other activities of the business. However, the salary of $18,000 Ben has to pay, which will lower the Ben profitability. And the second advantage that chances of fraud will reduce. However, problems will occur to hire the bookkeeper. नहीं. So Ben should employ the bookkeeper so he will have better control on business activities. Okay. The next question is that Ben has reviewed the age and level of his trade receivable and believes he should provide for possible doubtful debts. Which accounting principle would be applying by creating a provision for doubtful debt? So creating the provision for doubtful debt means this is basically, we can say that prudence concept. He's applying the prudence concept. Why? Because prudence concept says that you should not overstate your uh, you should not understate your expenses and you should not overstate your incomes. So what does it mean? It means that if he knows that there's a doubt that maybe this much amount of trade receivable he will not get, so it means that he should make a provision, and he should deduct the provision if it is increased from the expenses. So that's why he should make sure that expenses are not overstating. That's why he is basically using the prudence concept. Second part is that complete the table by placing a tick to show what effect creating a provision for doubtful debts would have on the bank's profit for the year, trade receivables, and cash at bank. Okay, so basically profit for the year. Of course, if he is going to create the provision, so it means that it will decrease the profit for the year, and trade receivable will also decrease. Cash at bank, there is no effect because of course increasing provision will affect the trade receivable and the profit for the year, but the balance which he has in the bank, it will not affect by creating the provision. Now let's see the third question. Sports tea, a club providing a sporting facilities to its members. Okay, so I think we should see the questions first. First of all, we have to prepare the income statement for cafe. After that, we have to prepare a subscription account. And after that, we will make the income and expenditure account. Okay. So now, first of all, we are going to make the cafe income statement. So first of all, we have the revenue minus cost of sales. Opening inventory, uh, plus purchases, minus closing. Okay, so now let's see the revenue. Uh, okay, so as we can see that first of all, we have the seeds throughout the year, and first of all, we have the cafe sales, which is $27,000. Now this is very easy. Now let's write it here. Now we are going to see the payments because like inventory, sorry, opening inventory. Now we are going to find out the opening inventory. So we'll get, this is the balances at 1st January, this is the balance at 31st December, so this is the closing balance, this is the opening balances. So of course, we can find out the opening inventory from the opening balances. So as you can see that we have inventory of food and drink, which is 1290. And we have the inventory of food and drink, which is 1340, which is the closing inventory. And we can get the purchases from the payments we made throughout the year. So yeah, so as you can see, these are the purchases for food and drink for each year, which is 8220. Okay. So now let's see the expenses purely for the wages. Okay. So first of all, we have the expenses. Yeah, so this is cafe assistants wages, 14,352. So this is the expenses, rent of premises, and rates and insurance. As you can see that there is nothing written that this rent, premises, and hiring costs is related to cafe. So that's why there is only one expense, and this is wages. So now we have now deduct this from this. So now we have the profit for the year. Okay, now we are going to make the subscription account for the year. So we know the subscription account is the income account. And for income account, you use a mnemonic A, P, P, A. So if the income is accrued at the start of the year, so we will write it here. If the income is prepaid at the start of the year, we write it here. And if the closing balance is prepaid, we will write it here. And if the closing balance is accrued, so we will write it here. So this is very simple. Balance BD closing balance. Okay. Uh, so as you can see, that we have the subscription owing from the previous year, which is 1520. So this is owing subscription. It means that this is accrued income. And we have subscription received in advance at the end of the year, and this will be our prepaid income at the year end. So if the income is prepaid at the year end, so we will record this. Opening balance will come here, which is 1520. Okay. And subscription received in advance, which is 2800 at the year end. Received in advance. Okay. So if we received it in advance, which is 2800. Okay. So we will write it here. Um, okay. And also, if you see that at the year end, there is subscription outstanding, it means that this is accrued income at the year end. So we are going to write it here. Now we need to make the entry of bank. When we receive the amount, so we will debit the bank and credit the subscription account. And we also need to make the entry of income and expenditure. Because at the year end, whatever the total subscription for the 1 year, we will record in the income statement. So subscription account will be debit because it will be closing down and sending all its balance to the income statement. Income statement will be credit. Okay, so now let's see that how much we, okay, so as you can see, in the proceed, in the receipt, as you can see, that there's a member subscription which is 160, 162,000. Okay, and we don't have the balance for income and expenditure. So now what we can do, we will add the credit side and we will deduct the debit side from it. Because credit side is the heavy side. 162,000 plus 1280. Okay, so this is equal to 163,280. So now deduct the 520, 1520 and 2800 from here. So 1520 minus 2800. Okay. So in income statement, we'll transfer the difference of the credit and debit side is 158,960. 158,960. So this is the, we will transfer this into the income statement. Okay. Yeah. And we will be writing this balance CD will transfer here as the opening balance. And this balance CD will transfer here as the opening balance. Okay. So now we are going to make the income and expenditure account. Okay, so this is very simple. We have to write the income here. Okay, so first of all, we need to add the profit from cafe, which is 4478. This is the part of the club income. And subscriptions are in income statement. This is 158,960. Okay, so as you can see that here, we have the receipt and we have received the bank interest. It means that maybe we have the saving account in the bank and we are receiving the bank interest from there. That's why 720 is also a part of the business cafe's income. So total this is 164,158. Okay. And now we need to deduct the expenditure. So since there is nothing we are manufacturing, that's why there is no cost of goods sold. It's just a simple service business. Okay, so now let's see for the expenses. So we can easily find out the expenses from the payment side. Okay, so salary and wages, we have we given the salary to sport coaches, administrative salaries. So this will be the part of the expense. Administration salaries. Okay, and now let's see the other expenses as well. So there's a rent of premises which is 16,250, but if you see the additional information, the contract for hiring sports equipment is 4,300 per annum is paid monthly. Okay, and it means that this is also we need to write in the expense because we have to pay this in month. And there's a rent of premises paid for the period from 1st January 2023 to 31st January 2024. But if you see that the year is ending on 31st December, but you have paid the amount till the 31st January, it means that the 1 month payment is extra. It means that you have received this extra, but this is not the part of you paid this extra rent to your tenant, but this should not be the part of this year's expense. That's why we need to deduct the 1 year's payment. Okay, so first of all, rent payment is 16,250. 16,250. First of all, divide it on 12. Not basically with the 12 because this is a 13 years payment. And that's why we need to divide it with the 13. So 16250 divided by 13. So this is 21250. So this is the 1 month's payment. So we need to deduct 1250 from the 16,250 so that we can deduct the extra payment from there. And there is one more extra payment, sports and equipment hire, which is 34,800. This is also a part of your expense. Okay, and there's rates and insurance, which is 3,200, and accountancy fees. Now add all these expenses and deduct from the income. So the total expenses are 1,45,340. Minus it from the income, and you'll get the answer for surplus for the year. Okay, so now let's see the question number 4. Okay, so in question number 4, Y Limited is a public limited company. Okay, state one difference between public limited company and the private limited company. Only one difference. Okay, so the difference is that Basically, public limited company is allowed to offer its share to the public, whereas private limited company cannot. PLC can allow to sell shares to public and PVT Limited cannot. Explain the difference between issued share capital and the called up share capital. So issued share capital is the amount of share capital issued to the shareholders. Called up share capital is the part of issued share capital for which payment has been requested from the shareholder. It means that the company sold out the shares, but they didn't receive any amount. And they are basically called up share capital. It means that they are calling and they are requesting that because since you purchased shares from the company, now you have to pay the capital for it also. Now let's state the benefits of operating as a limited company. Okay. So the first one is that there is a continuity of existence. It means that whether one shareholder will die or not, the company will continue. And there is a access to additional capital, and it is easier to obtain loans because financial institutions are eagerly waiting for the public limited company to give them the loan. Okay. So now let's see that we have to prepare the statement of changes in equity, and we will solving the extract from the statement of financial position. Okay. So first of all, we need to write the opening balances for ordinary share capital, general reserves, retained earnings, and we need to write its total. Okay, so why Limited's financial year ends on 31st December each year? On 1st January 2023, the company had this. So we have the opening balances. So we have the 80,000, 800,000 ordinary shares. Okay, share capital, 800,000. And we have the general reserves, which is 78. And we have the retained earnings, which is $62,000. So 800,000 plus 78,000 plus 62,000. So we have the total amount in opening balance is 940,000. Okay. Uh, so first of all, let's see that what is the profit for the year. Okay. Oh. So while limited provided the following information, proposed final dividend, share dividend, which is this interim. Okay, this is the profit for the year. Profit for the year ended 31st December was 126,000 before the payment of preference share dividend. Okay, before the payment. It means that we need to write the profit which is before the payment of preference share dividend. Okay. Mm, so what is the preferred dividend? Proposed final dividend 43,000 per year. 126,000 is a profit, but if you see the adjustment that before the payment of preference share dividend, it means that this is the profit after, before the payment of preference share dividend. It means that we have to add back the payment which we paid to the preference shareholders. So if you can see that there is a 300,000 redeemable preference shares of $0.5 each. So now we need to see that what is the total 300,000 is redeemable preference shares, and each share is basically for $0.50. Okay, so these are the number of shares, and now we are going to find out the share capital. So 300,000 multiply 0.50, 0.5. This is 150,000 share capital, and we paid 5% of it. So 50,000 multiplied by 500. This is 7,500. So add 7,500 with 126,000. 126,000. So it's going to be 126,000 plus 7,500. Just give me 1 second. 6,000 was the profit, and this is before the payment of preference share dividend. So that's why we have to deduct now the preference shares dividend 7,500, and this will give you the answer 118,500. So this is the profit for the year. So we will add it into the retained earnings. Okay. And now let's see the dividend paid. So as you can see that we paid a final dividend and interim dividend. Okay. So proposed final ordinary share dividend for $300 for the year ended 31st December 2022 was paid on 31st March. So we need to deduct it from the retained earnings. Okay, and also we paid the interim dividend. $40,000 was paid on 30th September 2023. Okay, and also the company decided to transfer $32,000 into its journal reserves on 31st December. Okay. We will not deducting it from total because the journal reserve, which is $32,000, we will deduct it from the retained earnings, because from the retained earnings we are keeping it aside, but it is not going out from the business. That's why we will not deduct it from the total. Okay, so if you just calculate now, this is 800,000. This is okay. So I haven't written it here. Okay, so this is 78,000 plus 30,000. This is 110. And if you just add 62,000, add retained earning minus dividend paid final, dividend paid interim, and transfer to general reserves. So we have 65,500. And in total, we have 975,500. Okay, so we basically have to prepare the extract from the statement of financial position. It means that we only need to find out the equity section. So in equity section, we have the ordinary shares. And we have journal reserves in this. We have retained earnings. Okay. So in ordinary share, we have 800,000. In journal reserves, we have 160,000, sorry, 110,000. And in retained earnings, we have 65,500. So in total, we have the equity, which is 975,500. So we completed the extracts as well. Now we are going to see the theoretical question. The company is considering expansion but needs to raise the additional finance to do so. So they are considering either issuing additional or ordinary share or debenture. Advise the board of directors whether they should issue additional shares or debentures to raise additional finance required. Justify your answer. Okay, so if they issue a debentures, so they have to pay the annual payment, annual interest rate. And but if they issue the additional ordinary shares, so they have to pay the dividend. And issuing debentures will be a kind of liability or loan for them. They have to pay them. And if they will issue the ordinary shares, so they don't need to prepay. Of course, this is the shares. So it means that like in my point of view, they should issue the shares. Like if they issue the shares, so it means that now they are they don't need to pay the liability, which is the debentures, and they can raise a finance by issuing their ordinary shares. Name the section heading in company statement of financial position where debentures would be included. Okay, debentures will be included in the non-current liability. Azim is a wholesaler and he sells goods on both cash and credit basis. Terms of business for all credit sales is 30 days. Azim has provided the following information. Using the information provided, calculate the following ratios for the year ended 31st December 2023. Show your working. First of all, we have to find out the inventory turnover. So what is the formula for inventory turnover? We need to, the formula is cost of sales divided by average inventory. This is the formula. How we can find out the cost of sales? Opening inventory plus purchase minus closing inventory. So now let's see. Okay. So we have the inventory, opening inventory. This is the closing inventory. Okay. And this is 24074. And carrier purchases are this 2782429 plus 278,429 minus closing. Closing is this minus 25,600. And we will divide it with the average inventory. So how we can find out the average inventory? We will add the opening and closing and divide it with the 2. So 24074 plus 25,600 divided by 2. So this is 11.15 times approximately. So they didn't specify that we need to find out the inventory turnover in days. That's why we don't need to multiply it with the 365. Now let's see the trade receivable turnover. So trade receivable turnover, we need to multiply okay, money owed by current customers. So the trade receivables are this. We need to multiply it with the 365 and we will divide it with the current sales. This is the formula. So 42,375 multiply 365 divided by 392,600. And we have the answer, which is 40 days. And similarly for trade payables, what we will do, the trade payables are, as you can see, that money owed to current customer at 31st December is this. So we will multiply it with the 365 because we want to find out in days. And we'll divide it with the current purchases, which is 278,429. Okay, so 21603 multiply 365 divided by 278,429. And this is 29 days. Okay, so now we are going to see that during the previous year, Azim's trade receivables turnover had been 35 days, and he's concerned that this is too high. So Azim had been considering using the service for a debt collection company to improve the speed at which he received his money from his current customer. Advise Azim whether he should appoint a debt collection company. Justify your answer with 2 advantage and 2 disadvantage. Okay, so if he will appoint the debt company, so there will be reduced administration because debt collection company will manage debt collection. That's why. But however, they have to pay the fees of debt collection company. This is a disadvantage. And there is now reduced risk of a recoverable debt because you hired the debt collection company. However, credit sales may reduce because your customer will not satisfy with you, and your customer, of course, the debt company will be interacting with your customers, and that's why maybe customers will not feel safe, and that's why they will not purchase more sales from you. They will maybe finding out the other suppliers. So yeah. So in end, I would suggest that, okay, he should use the service of the debt company because previously his trade receivable turnover was 35, but now this is 40 days. So it has increased. So he should do something about it because the trade receivable turnover is increasing in every year. That's why. Okay. Now let's see the next question. So there's 2 other measures that Azim might take to reduce his trade receivable turnover period. First of all, um, he maybe should offer cash discount. for prompt payment. And the second thing, he can charge interest on overdue amount. Okay, and Azim had calculated his gross profit margin and profit margin for the year ended 31st December 2023. He wants to compare these to his competitor Bahir, who has a similar size business. Okay. So gross profit margin for Azim is 33%. For Bahir, this is 37. Profit margin is 10 and 12. So suggest one action that Azim might take to improve his gross profit margin. Okay. So what he can do if he want to increase his gross profit margin, so if he will reduce the cost of purchase. So if the cost of purchases are reduces, so it means that the cost of sale will reduce, and if the cost of sale reduces, the GP will increase. And for profit margin, he can control the expenses. Okay, and E part is prepare the journal entry that Azim would need to make to correct this error. This is the error. During the year ended 31st December 2023, Azim took goods for his own use, which is 340, but had not entered in his accounting records. To correct this error, Azim made a year-end adjustment. Okay, so he took the goods for his own use, so drawings will be debit and purchases will be credit. Okay. Complete the table below by picking a tick to indicate the effect of correcting this error. Okay, so if he basically what happened here, he carried the purchases, so credit purchases are decreased, cost of sales decreased, and GP has increased. And closing capital. Okay, so of course, if he is like using the goods for his own use, so closing capital will not affect it. So this is it for today. We have completed the whole paper. This is a very tiring paper for me to to solve the whole paper for you guys. So the request is very simple again. Please subscribe to my channel because I've seen that 90 to 80% people who watched my video but they didn't subscribe. So this is not a good thing because if a person is doing a lot of hard work for you, so you should, of course, you cannot pay me like any cash. And of course, I'm not earning anything from the YouTube because I don't have a lot of subscribers and I don't even have, I haven't completed the watch time. Even my channel is not monetized. So what other things I can expect from you? Of course, I can expect that you should even, like you should at least subscribe to my channel and share my video with your friends. So please do this if you want me to, to make more videos for you. So yeah, okay, goodbye.